Happy Tuesday, everybody. Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. The big news, of course, is that Chinese artificial intelligence startup DeepSeek has sent shockwaves through the global technology market with its latest AI model, triggering a $1 trillion sell-off in US and European technology stocks. Nvidia's $465 billion rout, fueled by DeepSeek, is the largest in market history. The rout extended well beyond traditional technology names. Siemens Energy, for example, which supplies electrical hardware for AI infrastructure, plunged 20%. The VIX volatility index surged to 21.5, reflecting heightened market anxiety. The dramatic decline reflects growing concerns about inflated valuations of some of the largest technology companies in America. For many, DeepSeek is a new name, however not for regular China Update viewers. We've been following DeepSeek specifically and the Chinese AI sector generally for some time now. Indeed, if some on Wall Street followed China Update, they might not quite have been caught off guard. Venture capital investor Mark Andreessen called the new Chinese model, quote, AI's Sputnik moment, end quote, drawing a comparison with the way the Soviet Union shocked the US by putting the first satellite into orbit. DeepSeek's new AI model quickly rose to the top of Apple's App Store rankings over the weekend, posing a serious challenge to pricier alternatives like OpenAI. This development has raised doubts about the hundreds of billions of dollars companies like Microsoft, Meta, and Alphabet plan to invest in AI. Ver Cern Ling, managing director at Union Bancari Privée, in a note to clients explained yesterday, quote, DeepSeek shows that it is possible to develop powerful AI models that cost less. It can potentially derail the investment case for the entire AI supply chain, which is driven by high spending from a small handful of hyperscalers. End quote. Funded by quant fund chief Liang Wenfeng, DeepSeek's model is being hailed as a cost-effective rival to offerings from OpenAI and Meta. It has been praised for its transparency, with Mark Andreessen, who we just quoted, calling it, quote, one of the most amazing and impressive breakthroughs, end quote. The recent release has also reignited debates about the future of AI spending. Heather Burke, a markets editor for US outlet Bloomberg, wrote yesterday, quote, cheaper AI could squeeze profits in the longer term. Capital spending on AI will likely shape tech outlooks and may overshadow otherwise robust results. End quote. Chinese AI-related stocks reacted positively. The Hang Seng Tech Index climbed up to 2% ahead of the Lunar New Year holidays. However, AI stocks elsewhere struggled, and energy-intensive AI initiatives faced renewed scrutiny. Nurgunan Turutchavim of Alethea Capital highlighted the broader challenge. Quote, DeepSeek's product calls into question the massive resources Silicon Valley has dedicated to AI. End quote. Critically, for the US-China technology war, which we have been following closely these last few years, DeepSeek's rise has also challenged assumptions about the lag between Chinese and US AI capabilities. Despite trade restrictions on cutting-edge chips, DeepSeek leveraged open-source technology to develop its model. Charu Chanana of Saxo Markets summarized the stakes, quote, while current leaders like Nvidia have a strong foothold, the emergence of companies like DeepSeek reminds us that AI dominance cannot be taken for granted. End quote. But some Wall Street analysts and AI researchers have questioned the hype surrounding DeepSeek's achievements, with analysts at Bernstein in a note to clients observing, quote, it seems categorically false that China duplicated OpenAI for $5 million, and we don't think it really bears further discussion, end quote. UK-based The Financial Times writes today, quote, some researchers have even speculated that DeepSeek was able to take shortcuts in its own training costs by leveraging the latest models from OpenAI, suggesting that while it has been able to replicate the latest US developments very quickly, it will be harder for the Chinese company to pull ahead. End quote. Meanwhile, US outlet The Information, citing unnamed sources, reports that managers and engineers from Meta's generative AI group and infrastructure team have started 4 war rooms to learn how DeepSeek works. 2 of the mobilized groups are trying to understand how Highflyer lowered the cost of training and running DeepSeek. Meta wants to apply those techniques. a number of which a technical paper from Highflyer outlined to Llama. Some developers have said that although Meta's models are free, they are often more expensive to run than OpenAI's, in part because OpenAI can lower its prices by batching millions of queries from customers of its models. Smaller developers using Llama don't have enough queries to lower costs that way. A third Meta research group is trying to figure out what data Highflyer might have used to train its models, and the fourth war room is considering new techniques for restructuring Meta's models based on attributes of the DeepSeek models. We will end part one of today's video with this observation by veteran China analyst Bill Bishop. Quote, "The reaction looks overblown to me, but I do not give investment advice, so do not take my word on that. The world-class engineers at DeepSeek have clearly made some very good innovations, though they spent a lot more than the $6 million or so figure touted by some. The leadership of the company has also been explicit on multiple occasions that access to advanced chips is a bottleneck, including in a meeting last week with Premier Li Qiang." End quote. It is worth unpacking this point in particular. The compute gap between the US and China, further widened by export controls, remains DeepSeek's primary constraint. DeepSeek's leadership openly acknowledged a 4x compute disadvantage despite the efficiency gains. DeepSeek's founder Liang recently stated, quote, "This means that we need twice the computing power to achieve the same results. Alternatively, there's about a 2x gap in data efficiency, meaning we need 2x the training data and computing power to reach comparable outcomes. Combined, this requires 4x the computing power." End quote. Adding, quote, "We don't have short-term fundraising plans. Our problem has never been funding. It's the embargo on high-end chips." End quote. We continue with the quote from Bill Bishop today. Quote, "So while investors sort through the carnage today and US firms like Meta set up war rooms, there will also be renewed pressure over the US export controls. Have they failed, as industry and others argue, or have they not been stringent enough? As I hear people with a more national security background arguing, it is going to be an interesting debate to watch play out, but whatever the final answer, DeepSeek now has a massive target on its back." End quote. Indeed, with this news, the Trump administration may decide to ban the export of NVIDIA's H20 to the PRC. Now, if you would like to avoid being surprised on China developments like so many on Wall Street were this week, maybe consider subscribing to China Update, so you're on top of the most up-to-date analysis on China, which we follow closely every day. And if you're getting some value from this episode of China Update, don't forget to hit the like button. It's a tremendous help. Patreon and Buy Me a Coffee links are also in the description for those who want to help keep the channel financially sustainable. Up next, this week US-based The Wall Street Journal published an excellent piece called "In China, a Cat and Mouse Game to Rein in Crypto. Recent court cases reveal how middlemen are facilitating a booming trade, eluding a crackdown." 3 years after China imposed strict regulations on cryptocurrency trading, underground brokers like Chengxin continue to facilitate large-scale crypto transactions, revealing the persistent challenge Beijing faces in controlling its financial systems. Despite the ban, the article argues, these brokers have found ways to move millions of Chinese yuan into cryptocurrencies, like Tether, often turning a blind eye to the origins of the cash. Chengxin's operations exemplify this underground ecosystem, accepting over $100,000 in cash per transaction. Chen swapped yuan for Tether through overseas platforms, knowingly engaging with funds he suspected were tainted. His activities, later detailed in court testimony, underline how brokers like him fuel crypto demand in China despite government restrictions. China's crypto trading network thrives on secrecy, the article argues. Court cases and government reports reviewed by the Wall Street Journal shed light on how this shadow system operates. Some transactions support criminal enterprises like fentanyl trafficking, according to US prosecutors. Others involve middle-class citizens seeking to bypass China's strict capital controls, which limit annual foreign exchange purchases to $50,000 per individual. The government's attempts to curb these activities are hampered by the rise of over-the-counter OTC trading and peer-to-peer networks, which are harder to monitor than traditional exchanges. Blockchain data from China Analysis reveals that $95 billion flowed to China-based OTC brokers between late 2023 and mid-2024, more than double the amount seen 2 years earlier. While major platforms like OKX and Binance claim compliance with global regulations, their services remain accessible to Chinese users through VPNs, virtual private networks, and offshore shell companies. Some users also rely on messaging apps like Telegram to trade directly within informal peer-to-peer networks. The government has prosecuted several high-profile cases to deter such activities. In one instance, a crypto trading ring in Jiangsu province converted at least $150 million into Australian dollars within 18 months before its operators were sentenced to prison. Another network handled over $2 billion in transactions, leading to 74 arrests in 2023. For many young Chinese, cryptocurrencies represent innovation and a hedge against a weakening economy. While some use crypto for investment, others leverage it to move money offshore discreetly. This dual appeal sustains crypto demand despite official warnings and crackdowns. Chen Xin's case illustrates the scale and sophistication of these operations. Partnering with brokers, Chen used platforms like OKX and Binance to provide tether for clients, earning commissions while enabling activities that ranged from capital flight to money laundering for casinos abroad. China's central bank has pledged to maintain a, quote, high-pressure stance, end quote, against crypto-related crimes. However, the rapid evolution of trading tactics and the allure of cryptocurrencies as both an investment and a financial workaround make this an uphill battle. As the economy continues to deteriorate and many middle-income earning Chinese as well as wealthier Chinese seek to get capital outside of the country, this cat-and-mouse game is only going to intensify. Whether China can effectively rein in these activities remains an open question. However, as failure means more capital flight, putting pressure on the currency and the economy, the stakes are very high. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a good Tuesday, and I will see you all tomorrow.